how will these overnight cues impact our own markets. We have our research team joining in bright and early to tell you what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Reema, let me come across to you first up. What is the market setup looking like today?
Well, the GIFT Nifty is currently down close to about 55, 60 odd points right now, and this follows weakness on Thursday and Friday. So towards the end of last week, the market started correcting and it also breached a lot of important levels. So consequently, the Nifty and the sensex were down close to about 0.5% for the week. The cues, well, this is a holiday shortened week. So we've got a holiday tomorrow for Independence Day. But outside of that, the India CPI inflation print at 5:30 p.m. will be very crucial. And later this week, we will also get the outcome of the latest FOMC meet, which took place. ITC and Divi's Laboratory will be the big earnings to track today. In terms of flows, the FI sold 3,000 crore in the cash market. The DIs bought 500 crore on Friday. The FIs have been net sellers in the month of August to the tune of 7,500 crore. And this comes on the back of 5 consecutive months of buying. March, April, May, June, FIs were big buyers in the cash market, but in the month of August, they have been selling. U.S. markets had a pretty mixed finish. There was weakness in NASDAQ, as you pointed out. The inflation data coming out of the United States has been mixed. On one hand, the CPI print positively surprised, but the producer price, inflation print, which came out on Friday, negatively surprised the street. It came in, more than what the street was anticipating. Weak close on Europe as well as the key indices ended with a cut of close to about 1.5%. And the 10-year, US 10-year, has also inched up to levels of 4.16, and the dollar index is closer to that 103 mark. So it's a bit of a tentative situation. The GIFT Nifty is currently suggesting a bit of a subdued start to begin with.
Okay, all right. Yes, that will be the move that we could see on the Nifty today. But a lot of stocks that will be on our radar as well. Abhishek has that list.
Well, to begin with, Adani Ports, they have accepted the resignation of Deloitte as their statutory auditors. Lupin, their Mandip Unit 2 facility has completed US FDA inspection and there is no observation over there. GE Power, they have received an order from Stag Energy Services Private Limited worth about 62.5 crores. So, Uno Minda, they have Arm Commission's EV systems plant in Bawal, Haryana. They are expected to start supplies by Q3 FY24. Timken India Jamshedpur plant shall remain closed between 25th of August to about 3rd of September. This is on account of low demand as well as better demand planning for productivity efficiency going ahead. Sterling and Wilson, they have got a new order worth about 1,130 crore, and this is from Gujarat Industries Power Company Limited. Back to you.
Okay, all right. Those are a lot of stocks on our radar today. But let me go across to Manglam, joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So the market has been falling all of last week. In fact, the last couple of days were particularly bad for the index, and the Nifty has been hitting lower lows. So earlier, we would see some support coming around that 19,450 mark, but now it's closer to the 19,400 mark. So that's something we'll be watching out for, especially as the GIFT Nifty suggests a weak opening. In fact, one of the other things that stood out on Friday's trading session was the return of the FIIs selling. The FIIs have sold for most of this month. And barring 1 or 2 sessions where we saw some purchase, the selling returned. In fact, the institutional net outflow was close to around 2,500 odd crores. Not just that, we've been seeing consistent selling in index futures as well. So 100 crore worth sale is what we saw on Friday too. And as a result of which the FII long exposure, which stood at 59% at the start of the series, is now down to 40%. Conversely, the short exposure is up to 60% itself. And the weakness exacerbated as the Nifty Bank broke the 50-day moving average. That has been the weak index, and that breaking an important technical level meant that we saw further weakness as well. Do we see any resistance on the way up? Yes, because a lot of call writers at important levels. So 3.5 lakh calls written by the FIIs versus just about 2 lakh puts. 19,500 call is the most active with a premium of around 75 rupees, selling you levels upwards of 19,550 to about 19,600 would see stiff resistance. Whereas on the way down, 19,350 will be an important support to watch out for, mainly because 19,400 put writers have been active as well. Were we to break that, the 50-day moving average of the Nifty comes into play, which is 19,250, and that's something we'll watch out for. In terms of stocks, the mid-cap index has been outperforming, but 9 stocks are in F&O ban, so that's something we'll have to watch out for. Also, India Cements is the one that entered the ban, whereas Canfin Homes was out of the F&O ban after a big move on Friday.
Okay, all right, guys. Thank you so much for joining us. And prepping us up for the trading day ahead. Time for a short break now. When we return, we get excerpts of our conversation with the managing director of Tata Motors as the company achieves the milestone of 1 lakh electric vehicle sales in 5 years. Stay tuned for that.